Good morning, teacher and everyone. We are Group 4, and today we are going to present our analysis of MWG financial performance. First, we would like to introduce our group members, and after that, we will go through the table of contents of our presentation. My name is Dieu Linh, and now I will give a quick overview of MWG. MWG is Vietnam's leading multi-category retailer, especially in terms of revenue and net profit after tax. The company operates an omni-channel retail ecosystem with familiar brands such as Thế giới di động, Điện máy xanh, Bach Hoa Xanh, and Cong Pharmacy. Besides the domestic market, MWG has also expanded into the region through the consumer electronic toy venture in Indonesia. Additionally, the company is ranked among the top 10 best corporate governance companies in the large cap group, which shows its strong governance practice and long-term sustainability. Moving on to the next slide. This slide explains the objective and methodology of our report. The main goal is to assess the MWG investment attractiveness using a combined analytical approach. We will analyze the financial statement and key financial ratio to evaluate profitability, liquidity, efficiency, and capital structure. And then we apply a SWOT analysis and part of 5 forces to understand the MWG strategy position in the market. Technical analysis is used to examine price change, trading volume, and key indicators to support our final investment recommendation. So let's move on to the main part of this presentation. Analyze it. And here is the income statement of MWG. And the second one is the balance sheet of MWG table. In terms of financial, I will explain MWG profit margin change. First, MWG gross profit margin remained quite stable, staying between 19 and 23%, which showed good control over cost. However, in 2023, it dropped to about 19% due to a strong price competition, inventory clearance, and quicker consumer demand in Vietnam. The net profit margin was much more volatile. In 2023, it fell sharply to only 0.1% because of higher interest expenses and rising operating costs. From 2024 to the third quarter of 2025, the net profit margin recovered to around 4%, supported by the MWG Renewal 2024 strategy focuses on cost reduction and debt restructuring. In 2021, ROA and ROE and ROIC were at the highest level, thanks to the strong profit growth and efficient use of assets during the post-pandemic boom. In contrast, 2023 saw a sharp decline. This indicator dropped to very low levels because net profit was almost zero and heavy investment, especially in Bach Hoa Xanh, reduced turn on capital. From 2024 to three quarter of 2025, capital efficiency recovered clearly. ROA rose to around 6%, while ROE and ROIC improved to about 16%. So in that, the restructuring efforts were effective.
My name is Danh and I will talk about liquidity analysis. Next, moving on to MWG liquidity situation. Overall, the cash ratio stay very low, around 0.1 to 0.2. This shows that the company mainly use debt rather than cash to fund its expansion, especially for Bach Hoa Xanh and logistics, which increase short-term liquidity risk. Meanwhile, the weak ratio improved clearly, rising from 0.5 in 2021 to about 1.1 by the third quarter of 2025. This improvement mainly came from short-term debt restructuring and faster receivable collection, not from higher cost levels. The current ratio increased in 2021 and 2022 and then stabilized at around 1.5 to 1.6, suggesting better working capital management under the MWG Renewal 2024 strategy. Next, I will talk about efficiency analysis. Looking at operational efficiency, MWG performed quite well from 2021 to 2024. Inventory turnover improved clearly as DIO dropped from 100 days to 76 days, showing better supply chain management and demand forecasting. During this time, DSO also stayed low, which means MWG collected cash from customers quite efficiently, as expected for retail company. However, by the third quarter of the 2025, efficiency weakness, DAO increased to 96 days and DSO rose sharply to 37 days, showing higher inventory ratio and slower cash collection. On the payable side, MWG extended payment days to supply, with DPO rising to 51 days. Even so, the cash conversion cycle landed to 83 days, meaning more capital was tied up, which helped explain why ROA and ROE had not fully returned to their 2021 peak.
My name is Tuan, and next I'm talking about a solvency analysis. MWG's debt structure shows a clear shift towards short-term financings. Long-term debt only exists in 2022 and 2023 and then fell to zero from 2024 onward. At the same time, short-term debt increased strongly and accounted for almost all total debt by the third year of 2025. This means MWG relies more on short-term funding, which increases repayment pressure. When cash flows are unstable, the debt to assets ratio decreased after 2021 and then stay up around 60%, indicating a manageable level of leverage. The equity multiplier also came down compared to 2021, showing a more stable capital structure. Even with relatively high leverage, MWG can still cover its interest costs well. In three quarters of 2025, operating profit was nearly 6 times higher than interest expense, showing strong debt servicing ability. Overall, MWG is showing a strong recovery after the downturn, with solid revenue growth and a clear improvement in profitability in the first 9 months of 2025. This is mainly driven by the turnaround of Bach Hoa Xanh and stable demand for electronics. Although efficiency ratios weakened in the third quarter of 2025, the recovery in profits suggests that the restructuring strategy is working, and the pressure on working capital is more strategic than operational. Even with high reliance on short-term debt, MWG's leverage remains manageable and its interest coverage is strong, keeping financial risk at an acceptable level. We will now move to part 2, economic and industry analysis. The goal of this section is to explain the challenging external landscape that has impacted MWG's financial performance. Let's look at the macroeconomic headwinds. The 2021 to 2024 period witnessed two parallel pressures. First, persistently high inflation rising from 1.84% to 3.66%, exceeding the National Assembly target. This directly erodes purchasing power, causing consumers to tighten spending on non-essential goods like electronics, the core business of MWG. To control inflation, monetary tightening by the FBV pushed interest rates higher, causing MWG's interest expense to surge by over 114%. The result of this dual shock was that MWG's net profit margin collapsed to 0.1% in 2023, hitting both demand and costs.
My name is Thanh, and alongside the macroeconomy, the thrust of Vietnam electronics retail industry is inherently challenging, and analysis using butterfly force model made this clear. Number one, struggle for it intensely fear rivalry among major players like Điện Máy Xanh and FPT Shop, leading to perpetual price war. And next, prior power is very high. Vietnamese consumers are highly price sensitive and can easily compare price, forcing MWG to constantly spend on promotion and customer experience. Global suppliers like Apple and Samsung hold significant power, limiting MWG's ability to negotiate better wholesale cost. And fourth, the threat of substitute is indirect. The real demand is appearing not a competing product as consumer pull from between the economic time. And we cannot forget the threat from e-commerce platforms like Lazada and Shopee, which compete directly on price and convenience. So synthesizing everything, what's visual energy emerged. On one hand, this remains a company with undeniable market trend, leading market position, extensive network, and a strong brand. However, MWG financial performance exposed a key vulnerability at extremely thin and violence. Net profit maturing. This weakness stems from dual pressure. Macroeconomists have been combined with an unfavorable industry structure. And as a result, MWG is trapped in the cycle of high revenue but fragile profitability, raising concern about the long-term sustainability of its business model without strategic adjustment.
Duy. Now I will move to the technical analysis of MWG, focusing on three main indicators: moving average, the Ichimoku cloud, and the MACD. The analysis is conducted on December 31, 2025, using the daily time frame 1 day. At the end of the trading session, energy closed at 88 per 40,000 Vietnam per share. First, according to the Ichimoku cloud, the stock price is positioned above the clouds, which confirm an ongoing bullish trend. In addition, for the future cloud is relatively thin and upward sloping, indicating the possibility of stronger price movement in the near term. This reflects positive market expectation for MWG. Second, based on moving average, MWG share price is currently trading above its key short-term and long-term moving average. This suggests that the overall trend remains upward and that buying pressure is still present in the market. However, when using MACD, although the MACD line stay above the signal line, the momentum is only moderate. The histogram does not expand significantly, implying that upward momentum exists, but it's not particularly strong. In essence, technical indicators suggest that MWG is in an uptrend, but the stock is approaching resistance zones. This increases the likelihood of short-term consolidation or a minor correction rather than a strong immediate breakout. To conclude, an integrated analysis combining fundamental, macroeconomic, industry, and technical perspective provide a comprehensive view of MWG investment outlook. From a fundamental perspective, MWG shows strong recovery signals after a downturn. Profitability indicators such as ROA and ROE are improving. Leverage remain manageable, and interest coverage is solid. Moreover, the MWG Renewal 2024 restructuring strategy and a successful turnaround of Bach Hoa Xanh support improving earning quality and sustainable long-term growth. From technical perspective, although the price rating above key moving average and the Ichimoku cloud indicating an ongoing uptrend, MACD momentum remain moderate. In addition, the stock price is approaching resistance, which may limit short-term upside potential. Therefore, the investment implication differ depending on the investment horizon. For medium to long-term investors who focus on fundamentals, NWG can be considered buy. However, for short-term investor, a way strategic is more appropriate until clear technical confirmation or a price pullback occurs. Thank you for. It's the end of our presentation. Thank you for listening. This is our slide of references.